So let's get started. So the first story today is Remedies for small businesses. So this story came from Reuters, that it was pretty much everywhere. Nationwide, Investec and Co-op Bank got the cash to build out propositions for small businesses from the BCR Remedies Fund, Pool B. So between them, they got a total of £80 million. The allocations were 50 million to Nationwide and 15 million to both Investec and Co-op Bank. So Pool B is the pool that is awarded to, forgive me, this is the official language, but we'll get into it in a minute, facilitate the modernisation of existing business current account offerings or the development of new business current accounts or ancillary product propositions for SMEs in the UK. So basically, this pool was for people who already had a current account offering that needed, jazzing up, people who wanted to launch an entirely new business proposition, or people who were looking to build, products that go around the edge that enhance those SME business accounts. Earlier this year, we heard the winners of Pool A, who were Metro, Starling and Tide in partnership with Clearbank, and they were granted £280 million in the first round. A couple of things to note on this one. TSB pulled out last week, which is cutting it fine, to say the least. Rumours abound. Basically, rivals are saying it's because it didn't want to risk the embarrassment of losing out to much smaller banks again. I suspect we all have other thoughts on maybe why TSB had pulled out. At this point, it's there's a lot of discussion going on. There's a lot of rhetoric in some of the papers this week about the process being shambolic and time-wasting, but I don't know how much that came from the people who didn't win. So thoughts on this? Who wants to go first?
I'll wade in. I think in terms of challengers versus incumbents, I think there's kind of an interesting point, which is given what you have to submit for this in terms of the credentials that you need to go through, it's quite substantive to the point where you don't have a lot of time to actually do it. Therefore, how differentiated are the products actually going to be? So if you're actually putting a proposition across and there's one of X amount of companies who are going for it, how differentiated the product's going to be? Maybe not that much. So maybe they'll look at potentially other things, maybe more political things, maybe things like how much you're going to be able to match what the BCR remedies will give you, which is pretty much what everyone who won in Pool A did.
I think the BCR have been quite open that people who are willing to match are likely to do well. I don't think that that's hidden. Of all the murkiness that surrounds this process, and there's a lot of murkiness, and as somebody who's relatively neutral, I still haven't worked out. That is kind of one thing that nobody's quibbling, I think.
Yeah, but I mean, for me, I think, if you look at actually the variety of the three that won, Nationwide or a building society, that's something a little bit new, and they've got obviously a fantastic reputation and serve at the moment many, many businesses across the country. So, you could make kind of it's an incumbent versus challengers thing, but actually I think they've gone to three pretty stable companies. So, the question shouldn't be, was it because of this? But the question should be really, why wouldn't you give it to these three?
Well, I was a little surprised not to see Monzo on the list. And I thought, well, maybe it's a compliment. Maybe the government thinks they've already got it sorted out.
But Monzo aren't doing business accounts so much at the moment, aren't they?
That doesn't matter. This is if you want to do business accounts. And they have said they will.
It is in the roadmap, allegedly. I mean, I wonder if, if they're making public statements about what they are going to do, whether it's imminent enough. If Monzo just want to conquer the world, that's probably not certain enough for this kind of funding.
Maybe Monzo are holding out for the personal consumer market to be strong enough that they don't have to move so much into the SME market, because it does seem to me that one of the reasons why we've seen a lot of challenger banks really target the SME market is because they know that they're not actually making enough money or are likely to make enough money from the consumer market. So maybe Monzo are just, fronting it out and deciding we're going to stick with this and see how far we can go before we have to call in the SME card. Who knows?
I mean, I think it's interesting because I slightly disagree. I actually think that the current flurry in, of services we're seeing for SMEs are actually because the retail market's so saturated. So if you look at how many propositions there are out there for consumers in the retail market, and they're not all banks, if you look at the likes of Money, it's been hugely successful, but you can effectively use Money as a bank, what's going on the back end, consumers don't really care. They've just got 1 million customers. They're practically the second biggest of the new digital-only banks. So I kind of think that the SME thing is the fact that we're seeing the proliferation. Of course, the cash is going to help. Of course, somebody says you've got a chance to win millions of pounds. You're going to be like, oh, maybe we'll have a bash at that. And I think that the spread of winners so far also means that people who are going in for pool C and D are going, well, it's anyone's game, so let's all have a bash at this. But I do think actually the SMEs, the market is that much further behind the consumer market anyway. I think this is more people going, if you look at Tide and Clearbank, you look at Investec, they're partly they don't want to lose out, but partly because the retail market is so saturated, they're not going to be able to compete at this point.
It's also a very easy extension. So most of the business or SME current accounts that have been launched are actually really similar to the retail current accounts. And that's because many new businesses are single owner, single employee types of startups. So if you have a great retail product, why not just extend it to SMEs? And get some free funding from the government.
Yeah, and I think that's a really interesting point as well, because of the SME propositions we've seen from the digital-only challenges, if you like, they are pretty much all sole trader or limited to two director companies. And they will tell you that is because they want to get their MVP right first, which is partly right, because a lot of these are offering much more complex services, tax calculation, invoice sending and management.
And to be fair, that is a market that has not been well served up to this point by the mainstream banking sector.
No, absolutely. And I think that's absolutely correct. But I think that what we now need to see is people going for that middle layer. The people going, well, this product, Starling for Business, is not enough for me, really, because I've got 50 employees and I need to hold more than £100,000 in my account because I'm not going to make payroll if I don't. But on the other hand, RBS don't look at me twice because I'm not making 50 million in turnover. So I actually think what I would like to see is this money sort of moving up and serving that middle level, sort of between the sole trader and the two director companies to the sort of 4 or 5 director companies who've got 50 employees who are somewhere in the middle.
And that's probably why the waves of the two pools have come as they are. I mean, the challenger banks, forgive me for being cynical, are maybe the ones that get the hype and look at how competitive and differentiated this landscape is becoming, but actually are the ones that are going to do the work and apply this capital, the ones that can serve, already equipped to serve those customers. Frankly, I'm amazed that it's taken so long to get to this point. We look back to where SMEs really stopped being served, and that was post-2008 crash. But individual consumers are the ones that make the noise, therefore rightly, and I suppose we all are them, they're the ones that get served and get reacted to. Obviously, going back to, I think it was around 2012, the likes of funding circles started. I mean, actually, probably a bit later, probably about 2014. The likes of funding circles started getting government funding to help provide loans to small businesses. But that funding for the banks hasn't been there. So fast forward 10 years and we're finally starting to see some real competition being driven for small business lending, which is fantastic.
And I think we should point out there really is competition, because I was doing some research earlier. So Tide has, I think, and these numbers, around 80,000 accounts. Co-op has 90,000 small business current accounts. TSB only has 100 and something thousand. So the competition really is there. Now, you can say maybe people who have a Co-op account also have a Tide account, and also maybe the people who are using the Tide accounts, there's people who have previously been sole traders who use their PCA, like the personal current account, because an awful lot of sole traders haven't bothered with business accounts. Maybe that's where the transition is happening. But to your point, there is definitely competition in that market happening.
I would like to see what the drop-offs are for the likes of Tide, though, because speaking to a few people who've opened Tide accounts, I haven't, but I know some who have, and they haven't been terribly impressed with the interface, and they don't feel like it's that different from what you can get from a traditional bank account as it is. So yeah, I'll be interested to see whether that success is maintained.
For me as a business owner, I think the real innovation within a business banking account would have to come around how it helps you do things more efficiently. I think oftentimes in your personal life, you're quite happy to be inefficient, and yet different rules apply at work. And for me, I think budgeting on a business level is going to be much more challenging to deliver from a user experience point of view than budgeting on a personal level.
Yeah, I think it goes back to how differentiated these propositions actually be from one another. And I mean, from my perspective, I think if you look at, let's say, Nationwide, who are obviously incredibly reputable, have got their own license, can leverage other services that they've currently got, have been awarded the top amount in here, and could probably do something very, very significant in that market. Versus if you look at what 15 million actually probably provides you, which is what the others have received, how far can you go with that if you consider their customer base and others? So, like for me, it's like there's a level of investment which will dictate, and even if they match it, which will dictate how far you can go from a proposition perspective. But I do feel that sort of if you're outside of that top four, as in the three that won it in Pool A and Nationwide, you're at a natural disadvantage anyway, because you're going to have to spend it in a certain way. There's obviously preconditions which are all public that you have to subscribe to, and your proposition naturally, therefore, unless it's like specifically niche, but I don't think they've necessarily the time to develop specifically niche propositions. I think they'll find that the competition might eat them up.
So I wonder if it's because it's both modernisation and ancillary products. Actually, if you've got 30 million, you probably can bring in digital onboarding. So that probably is a modernisation of an existing product. So I do you know what I mean? I don't know. But speaking of Pool A, this is a beautiful segue into the next story.